Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, jobs are collapsing. No matter what you've been reading, you need to hear the data from us. We're going to get into it in this video, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, what's going on with this jobs data?
Yeah, so this is a really interesting data point that the crux of this whole article that I read is that we're actually already in a recession because the BLS and the people that declare recessions are usually off by a quarter. And what you really want to look at, because they mostly look at lagging indicators and they look at seasonals and stuff like that. And the seasonals aren't really showing up this year like they expect. Like they're showing a 10% increase in construction employment. Hello, we know that's not happening. And so this article looked at the forward-looking items like what are permits, being pulled and job openings. And I thought I'd show you the job openings one because it's really interesting to me is that if you notice, look at the plunge into 2000, the plunge into 2008, obviously the V for the pandemic, but also now we're dropping again. And this one shows you job openings by size of employer. And what's really interesting is the lower half of the employment curve is really starting to get bit, really. And that is the mother's milk for our economy, Phil. If small businesses lay off, it doesn't matter how many big businesses hire because they can't make up for it because, you're talking orders of magnitude number of small employers. Then, 84% of small employers are under 100 employees. And out of that, 84% of those are under 4. So as these companies really start breaking down in terms of employment, job openings are collapsing in that area. And they can measure this stuff now because, with Indeed and things like that, the payroll companies all manage and watch this stuff at a much better level than they did 10, 15 years ago because more people now can afford to post job openings that we can measure. And so, yeah, it's a problem. And really the conclusion is that we're really already in a recession. The data now from the government is just playing catch up. And this next one is just another view of the job openings and employment. And again, they're falling off a cliff. And we talked last week about credit contraction. Look, if you're a small business owner, it's different than if you're a mega corporation. Mega corporation is, hey, we may have 6 or 8 quarters here of suboptimal growth, or, we may even lose some money, but we have a pretty big cushion. Small business owners, they're going to fire people as fast as they can, no matter survival for them. And so you're starting to see the lower end of the employment spectrum start to fall off, and that's bad news. The other slide I want to show you is skilled versus non-skilled. And this chart may look confusing, but really what you want to look at is the job openings to the employment rate. That's on the bottom left. You see that like kind of a crooked smile there, Phil? What it's saying is as job openings fall, unemployment rate rises. And we know, just because the other 2 slides I'm showing you, and this is skilled positions, not unskilled, okay? The skilled positions, we get up to an 8% unemployment rate for skilled workers. That's who's making the money in this economy. That's who's paying the taxes in this economy. And these are a lot of white collar workers. And so the job openings cratering in this space. And the expectation is as the job openings fall, you can see where we are. You see the yellow dot right there? Okay, as those job openings fall, we can roll our way all the way out to about 8% unemployment. How about those apples?
Well, Bob, I think that's kind of what the Fed wants, without saying it. They've been talking about the hot jobs market, and I think it's part of their tool to get the inflation down is to have a cool off in the job market so that labor demand or wage demand stops increasing, because increasing increasing wages is increasing inflation. So I think they're throwing everything that they can at this thing to try to induce a recession. And like Kashkari said a couple of months ago, he says, if you're going to play chicken with the Fed, you're going to lose. And that's the thing with this market. They think that they're going to get the Fed to blink. So far, the Fed hasn't blinked, right? They've maintained the rate raises. I think the final head or battle is going to be whether or not the Fed futures market is right about a rate cut in Q4, which would, you and I both know that's going to be recession if that's the case. So either the Fed funds market sees a recession in Q4, like big time, without a question, or they're continuing to be wrong, because they have been wrong numerous times. The Fed funds futures usually is pretty good. They've been wrong like several quarters now as far as when this cut or this pause is going to happen, and it hasn't happened. So I'm kind of, for once, I'm agreeing with Kashkari in that you're probably not going to want to play chicken with them. And then if that's the case, then you're really not going to get too bullish in this market up here, because they're going to continue to take the liquidity out. Yes, we had a little bit of a speed bump in that they let liquidity back in when they were opening that Fed lending window, but that's done. And what people don't realize is that in the last 5 weeks, we've been talking about this in the room, they've actually accelerated the QT on the balance sheet. They're rolling off the balance sheet faster than they ever have before since they've started expanding their balance sheet. So I think they're dead serious about it. And I think the market, the longer the market tries to call their bluff, I think it's going to prolong the inevitable, which is a pretty decent downturn here over the next couple of weeks. Maybe it's after OPEX toward the middle of the month, but I think it's coming, Bob.
Well, I don't know if you saw this. There's, Danielle Martina Booth, she's a former Fed staffer or whatever she was at the Dallas Fed. But she said that people have Powell all wrong, that Powell has spent a considerable amount of time greasing the skids in Congress and selling them on his plan on giving us a longer term, brighter future. They said Janet Yellen has been MIA on this whole thing, just not even around. And if there's going to be a war between Powell and Yellen on this, is that eventually Powell's going to win. And I think she just ran out of bullets right now, because she'd been fighting Powell this whole time, because she's a globalist fiat queen, and so I think he truly wants to break that mindset, and I don't think he cares if we go into a deep recession to do it, because people don't realize politics plays a part here. We have a war going on in this country between the globalists and, I would say, I don't want to call them necessarily nationalists, but people that don't want this, whatever this fiat regime is that they're looking to do. There's people that don't want it, and they may want their own version of totalitarianism, but they don't want that one. And I think they're trying to break this so that every time there's a problem, they roll this money out of people, and when they roll the money out of people, they're buying votes. And Powell's a staunch Republican, and so he's in power now, and I think he's playing his part. Now, does that mean good or bad things for us? Likely, probably a pretty severe recession coming if he continues on the path he is. And just look at this unemployment report that we had on Friday, Phil, gave Powell no reason not to raise rates again in June or July. So, and that's been our thing. We've been saying it's going to be June, July is going to be the last raise. Right. I would not be shocked whatsoever he throws another quarter point at it, because look how people responded to the unemployment report. Right. Even though we know it was a bogus report, they bid it up like crazy. Right. So, I don't know. So that's it. And look, guys, we're stuck at 4,200. I mean, we've been in now multi-month range in the markets. And the only way you're making money is you're buying low and selling high. So there's no trend anywhere. Until 4,200 breaks, there's no bull market. And if 4,000 breaks, then we probably have the bear market continuing. So that's kind of where we are. So with that, Phil, I'm going to wrap it up. Guys, check us out. We have a great one for you tomorrow. Really interesting things happening in crypto land. You're not going to want to miss it. Hit like, hit the notification bell, check us out. Look for us every day. If you're bored, start looking for Trade Genius on YouTube. You'll be glad you did. Have a great day.
Bye-bye.
Trade